Hi there, a very warm welcome. You're watching the daily edition of Your Trades on ET Now. This is Priyanka Pal along with me, Snehi. Snehi, at least we've seen some respite coming in small cap sector and plus the banking names. Banking names were clear in uptrend today, but a clear divergence what we saw Nifty, Bank Nifty. There was a good smart recovery on the banking names. Nifty was in a range only and in fact rather closed lower only below 23,000. But Bank Nifty, that one actually gained good momentum and closed with a closed an upward trend only with a gain of 473 points. That's what we saw on that. Mid cap 1.2% recovery what came in on the index level. Small cap still trading in the bear zone, but recovered smart recovery in many of the stocks here in small cap stocks like BSE. There was good movement in many of the stocks gaining more than 5588% here. 2.5% gains coming in on the small cap pack. The sectors where we've seen the maximum of the hammering, maximum of the damage done, they were the first to recover from the small caps. Names like Reality, Media, even PSU banks, and to some stocks from metal coming in, where we saw a good pullback coming in. But then Pharma, IT, FMCG, they were the losing sectors. And of course, this is on the back of majorly the tariff announcement that is actually creating the tremors and the threat all across the globe. And Pharma this time today, because Trump talking about the tariffs on pharma now, and a couple of names wherever the revenues, good part of revenue coming in from US market, those stocks were hammered badly. Even stock like Zydus, Looping, Dr. Reddy's, Glenmark Pharma, Cipla, Sun Pharma, they were hit badly today from 0.5% to 2.5%. At the same time, on the flip side, there were some of the names from the auto ancillary which were gaining, but there are a lot of talks about threat looms on this particular sector also. But brokerage notes actually kept many of the stocks afloat today, Snehi.
Absolutely. One of those biggest winners when it comes to the brokerage-led stocks today was Macrotech Developers or Loda, because you had a Jefferies note coming in on the space. It was looking positive. Another one was a note coming in on Maruti today. That was also looking very positive with a target price of 14,000 rupees. So that was also looking good for Maruti. However, that stock is ended in the red. And in fact, a lot of pressure building in on that stock despite a positive brokerage note coming in. 0.8% lower is where Maruti Suzuki has ended for the day. What's also looking good today, however, on the flip side was oil, because you had WTI and Brent. Both of them were gaining as OPEC has mulled a supply hike delay coming in. And remember, when there is a supply hike and there's a delay on that front, it means that the supply is still continuing to underperform or not match the demand. When the demand is higher than supply, prices are about to be on the higher side, and that's exactly what has happened today with Brent as well as WTI. Brent rather is on the upside of that 76 mark, $76 per barrel mark. So it's looking good for Brent and WTI. And some of these names, the HPCL, BPCL, IOCL, some of these names were in focus on the back of this news flow. Lastly, the insurance space was in focus today, because we understand from sources that the IRDAI panel is likely to review insurance reforms soon. My colleague Anurag broke this story earlier, and it's been a big story in terms of the insurance reform space, and a lot of insurance counters were also in focus on the back of this story. But on that note, let's move away a little bit from the market wrap up today and understand what the outlook is for tomorrow's trading session. And let's do so from Richard Jain, the Vice President of Equity Technical Research at Wealth Management, Motilal Oswal Financial Services. And Richard, thanks so much for joining us on the show. Once again, we're seeing resistance, and a lot of resistance at that 23,000 mark. We've ended south of that mark once again in today's trading session. On the flip side, it's the broader markets that continue to do that heavy lifting. And just in one session, the kind of losses that the small cap had built yesterday, they've reversed and recouped all of that. What's the outlook for tomorrow's Nifty levels? And even more importantly, give us a sense of where the broader markets are headed, because they largely seem to be dictating the entire market momentum these days.
Yeah, hi, very good afternoon to both of you. Well, certainly, if we look at last few trading sessions, the broader markets have seen very sharp correction. But post this corrective phase, the momentum readings on the shorter term charts are quite were in the oversold zone. And also, if you look at the previous swing low supports, then the small cap index has been trading. Small cap and the mid cap indices have been trading around the 4th June low, which was made on the day of election results, where the panic selling was seen. So I think just whenever you see such a kind of combination where the prices come near the support and the RSI or the momentum setups are oversold, markets tend to give such pullback moves. and hence we are witnessing a pullback move in the broader market. So we think that still we would see some more positive momentum on the higher side, because on the Nifty also this 22,800, 22,750 has been acting as a crucial support. Now today I think the indices, the Nifty index didn't participated mainly because of the selling pressure seen in the IT heavyweights. But apart from the IT heavyweights, if you look at the other sectoral indices, I think the momentum was much positive for a decent pullback. So we believe that the up move could continue in tomorrow's trading session as well. Focus should be more on the stock specific ideas, where I think a good outperformance can be seen. But as far as even index is concerned, we think the downside seems to be limited, at least for the near term, till this 22,800, 22,750 support is intact.
The bottom, the downside looks limited, but is there still in the buy zone or not? We'll have to wait and watch on the indices. But then with that, Ruchit, please flag out two of your top recommendation for our viewers also.
Yeah, so a couple of recommendations. First would be definitely from the banking space. I know we have seen that if you look at the recent corrective phase, Nifty Private Bank Index and Nifty Financial Services Index, these are only two indices which has not seen a breakdown before its below its January lows. In fact, even Nifty is currently trading around its January lows. So you can see that all the indices have corrected in last 10, 12 trading sessions, except private bank and financial services. So when the markets were correcting, these were the space where no, we have not seen price-wise correction, and today clearly we can see that any kind of pullback move, the outperformance is there from the bank Nifty index. So we think that this private banks and NBFC space would see some good momentum in the short term. So Kotak Bank is our top pick within the private sector banking space, where a good high top, high bottom structure has consistently been seen post the announcement of its quarterly numbers. So Kotak Bank, one can look for buying opportunities over here too from a short term perspective, with stock below 1920 for targets around 2100. And UPL is another stock where a good outperformance has been seen within the chemical space. A long consolidation breakout was seen a couple of weeks ago. Post that, the stock is continuing its up move. So even on any dips, the 20 DMA is acting as a support for UPL. So with stock below 634, short-term traders can look for buying UPL for targets around 680.
Okay, Ruchit, before I let you go, I couldn't help but notice both the picks that you've picked out for our viewers today, Kotak and UPL, have both reached their 52-week highs today. What is driving this convection and momentum on the charts? Because 52-week high, do we still see some upside on both of these counters?
So the idea is that in such markets, if any stock is trading at 52-week high, then it could only because either of lack of selling interest in such names, or there's a very strong buying interest. That's why even when the markets are correcting, the stocks are at 52-week high. So I think this theme should work out going ahead, and even volatility is expected to remain high in the broader markets in the short term because of the kind of correction that we have seen. So in such volatile times, I think one should look for such stocks where a relative outperformance was seen in the corrective phase.
Thanks so much for taking us through both of your picks, and thanks once again for joining us on the show and sharing your market outlook with us. Time now for some opinion on the market amid the current volatility and policy uncertainty stemming from the United States. Is the time ripe to look at the pharma space, and within pharma, is there merit in looking at CDMO plays for the long-term returns? Let's go across and listen in.
CDMO is a very long-term trend. The need for that is moving away from China, diversifying the base for innovator drugs, being sort of manufactured elsewhere. And US knows what their interests are. Just by imposing some short-term tariffs is also counter to their interest, right? So I think those adjustments will be made. It's like same thing, when IT was going through post Y2K, everybody wrote off IT, that IT is over as a sector. But we know that sector has grown 20x post that, because some other once Y2K was over, new avenues of opportunities came because there was underlying need for that. So same way CDMO is an underlying need, and that will play out. I have no doubt in my mind. Short-term adjustments will be there, might be there. I mean, one can't really comment on that, but I don't think there's anything structural threat to that.
So that was a word coming in from Vikas Khimani. But moving on, Aman Chauhan from Abacus Asset, he shared his outlook also on the markets. He believes that small and medium sectors will start doing well once the earnings stabilizes. He sees opportunities both mid caps as well as large caps. Listen into what exactly is rational and the kind of sectors that he's eyeing at.
Mid and small cap will start to do well once you see the numbers coming in. There are some sectors, companies where numbers are still strong. Maybe the P went up too high, which is now corrected, and it will stabilize at current levels. And overall, once the market starts to see some momentum, these stocks will also perform in that. So it's not a large cap versus mid caps. Within mid caps and within large caps, wherever we see earnings visibility, those stocks will outperform for sure. We are somewhere midway right now. It's not that we have seen the bottom or the worst is over kind of thing. At the same time, we have seen a decent correction. So it's not that we are going to fall another 30-40% from here on. Maybe 5-10% from current levels is possible in the near term before we start to recover. But if somebody has a 3 to 4 year view, then at least 50-50 should be the allocation between mid caps and large caps, because ultimately Indian equity market is all about mid caps. This is where the maximum opportunity is. We all know the large cap, we all know this company, good company, but it'll give you a normal return. If you need to generate an alpha, you need to look at mid market.
All right, so 50-50 is that the kind of the portfolio construct what Aman was suggesting in between amid a large cap as well as amid, that's how your portfolio should construct should look like. We stay for a short break here. When we come back, we get you the data from the derivatives as well as the buzzing stocks for the day. Don't go anywhere. You tuned into your trades on ET now. Now let's get you the data from the derivative space. Of course, the trend on the Nifty appears to be flat until a decisive leg up doesn't appear above 23,150. That's what the measure of the consensus view coming in from the experts. Maybe the trend seems to be flat till the time. But then Bank Nifty, there was a clear short covering trend today. We saw some of the banking majors did the heavy lifting today, and we saw a surge of more than 450 points coming on Bank Nifty. But for Nifty, we still see a resistance at a level of 23,100, even 23,000. These two strikes actually saw the maximum of the call writing pressure also. But at the same time, if you look at the support, we do find a support also, and that's why Rajat was maybe flagging off that at least the market won't see much of downside from here, because we can see probably a bottom forming or a base forming. At least the put writing action suggests that 22,800, 22,900, these are the strikes where the maximum of the put writing happened today. So could be possible that we won't fall much, but we need some more stronger reasons to start moving from here.
Looking like somewhat in hurdles that we need to cross on the Nifty, because we seem to be ending below that 23,000 mark on days at an end, and that's seeming to be a big resistance on the upside. On that note, let's move away from the F&O space and get a little sector specific now, because Pharma was a sector that was in focus today. The second largest sectoral loser behind IT. Pharma stocks slumped after Trump's announcements as the Indian industry was banking on higher exports to the US. Now remember, Indian players, pharma players rather, account for a major chunk of the US generics market, and Varun is joining us to tell how or what kind of an impact these tariffs could have on the pharma players. Varun, take it away.
If there are tariffs imposed on Indian pharma companies or globally pharma companies, this is going to impact the other pharma companies, but as well as US, because the overall healthcare cost can go up. Now, HSBC has come up with a report which says that in US pharma market, the generic drugs actually account for around 90% of the prescription volumes, and Indian companies actually supply 60% of the total generic volumes. If you look, India's total exports to US was around $10 billion, and India also imports medicines from US that comes to around $1 billion. That is almost 1/10 of the export that India does. And if you look at the $10 billion, it is actually 30% of the total export that India does in the pharma sector. For imports that India does, they actually charge a 10% tariff on the US medicine, whereas US charges 0% on the imports that they do on the Indian medicines. And actually, for Indian companies, US market is an important market because around 10 to 15% of the overall revenues comes from US market. For example, Zydus Life, they derive around 47% of the revenues from US market. Dr. Reddy's, Lupin, they derive around 40 to 45% of the revenues from US markets. And the products that are sold to the US markets, they are basically drug formulation, biologics, bulk drugs. These are some of the products which are sold to the US markets. Now, HSBC says that they were expecting in FY26, actually, the overall sales to US market as percentage of revenue would be somewhere around 10 to 60%. But now, if the tariffs are imposed, that would impact the EPS of these companies. Now, they have taken a hypothetical, condition, and they say if there is a 10% increase in the overall tariff, this could impact the overall EPS of around 1 to 6.5%. for FY26 for several of the Indian companies. For example, the impact on Aurobindo Pharma on EPS would be around 5.5%. For Zydus, it can be around 6%. For Dr. Reddy's, it can be around 6.5%. Now, this is the assumption for a 10% increase in tariff. But if it is 25%, so there could be a manifold impact on the overall EPS of this company. This is what HSBC says. But yes, this could impact Indian companies, but yes, as well as the US healthcare cost.
Right, thanks very much, Varun, for that detail on the space pharma, which was hit the most today. One of the space which was hit the most, and the tariff threat which is moving the sector. But we did speak to a host of a couple of experts on this. We spoke to Vishal Manchanda, who's a senior VP Institutional Research for Systematic Group, to understand how deep this threat could be, and also we spoke to Dipin Mehta about his top pharma picks. Listen in.
If at all the tariffs are imposed and we see a 25% tariff, I'm not sure whether we'll see a negative impact on Indian companies. So what essentially will happen is Indian companies will continue to sell at the same price as they have been selling today. The tariffs will be on top of that. So the point here is the US doesn't have domestic manufacturing to accommodate demand to accommodate basically to replace the demand that's coming from India. So essentially they'll have to continue to buy from India at whatever prices, and the consumers will have to pay for the tariffs, incremental tariffs that Trump imposes. So Indian companies do not have a cushion to absorb the tariffs within their prices. If at all it happens, it's going to be inflationary is how I would look at things, and there will be less impact on the Indian companies in terms of they being forced to sell at lower prices to compete in the market.
I think the way Sun Pharma has managed its business model is very impressive, and they are going from strength to strength because of their specialty products. So it's a large company as well. So we have it as a part of our core holdings as a measure of disclosure, and that's certainly a company to watch, I think, going ahead as well. At the same time, I think there are certain smaller companies, I may name them as with disclosure, like we're very positive on Kaplan Pharma, which is a large export to Latin American market, and they're looking at exporting into US as well. We have seen a very decent turnaround in Divi's Laboratories also, and some of the issues around CSM business also, they have been lifted. That looks quite interesting. And a completely beaten down stock, which one should put on your radar, is Gland Pharma as well.
Okay, so those are the likes coming in from Deepan Mehta as well as Vishal Manchanda when you talk about the entire pharma space. But on that note, let's shift focus and talk about a sector that has ended today's trading session rather flat, but nonetheless with a slight negative bias, and that's the entire auto space. Because keeping up with Trump's tariffs, then let's take a look at what will be the implications of Trump's 25% tariffs on autos. And Shrishti, who tracks the sector closely, is joining in with key takeaways from Macquarie's note on the same. Shrishti.
Well, yes, Donald Trump has been threatening of a 25% import tariff imposition, and that could actually impact some of these global auto majors companies. But the good news is that there could be a limited impact on the Indian players. Firstly, let's understand the dynamics. In 2024, 40% of the new vehicles sold in the US were actually imported, and in that the major contributors, or rather the three largest exporters, being Mexico, Japan as well as Korea, and even Canada. And Korea was one such market that has seen a jump on a YOY basis thanks to the new EV sales coming in from Hyundai as well as Kia. Now, a lot of these brokerages are highlighting that this could actually be one of the tactics by Donald Trump, and could actually play in terms of getting these global auto majors into the US markets, wherein they go ahead and commit any sort of an investment or try to increase their localization efforts from the US markets. Then they could have some relief from the US tariff impositions. A lot of these things are in play. But let's understand that what could be the likely impact on the Indian markets, because though for the global OEMs, or rather the Indian OEMs, they don't have much of an exposure in the US markets. But some of these auto ancillary companies do contribute in terms of the overall imports by the US. 3% of the total auto ancillary bill is from the Indian markets. In that too, some of these players which contribute to the US markets, being Sona BLW for a matter, which contributes gets 60% 30% of its revenue from the US and the European markets, and Tata Motors is another player that could likely to get impact because of the imposition of tariffs in the European Union as well, because Tata Motors JLR drives 30% of its revenue from the US market as well. So that's the impact on some of these select auto majors, but all in all, very limited impact for India.
Limited impact could be seen on the auto industry. This is what Srishti was gathering from the reports and analysts that she's spoken to. With this, it's a wrap on this edition of Your Trades. Thanks so much for watching, but stay tuned for more updates.
If you like this video, then like, share and subscribe to ET Now.